Our next guest is out with a note this week outlining which media companies may stand to benefit the most and the least from advances in AI. Joining us now, Ben Swinburne. He's Morgan Stanley's head of U.S. media research. Guess the first shot, Ben. I would assume we're going to have a lot more reports like this one coming. But, you know, what are some of the early takeaways from the work that you did here to put this report out?
Well, Dave, thanks for having me. Sorry you and I aren't in Sun Valley, but I'm sure our ticket got lost in the mail.
Yes,
I think
exactly.
From my perspective, Netflix and Spotify in video and audio are really well positioned to benefit from the tools that generative AI are bringing to the market. I think about that both from a consumer perspective, in terms of increased personalization, discovery, curation, and from a creator perspective, talking about some of the tools that Julie was just referencing. We do think, going to production costs, that there are savings in the range of 10 to 30% that generative AI could help deliver to studio productions. But we do caution that in a competitive market and a talent-driven industry, a lot of those savings may end up just moving from below the line to above the line into talent costs. So greater payouts for top actors, directors, et cetera.
You know, I do wonder about the ability of just independent creators to do so much more on a level that almost equals those of the professionals. I can imagine that will only increase over time. How much of a threat is that, or what platforms will benefit from that increased content and the robustness and richness of it?
Yeah, I mean, if you think about the music business and what that's been through in the last 10, 20 years, it's been an explosion in the amount of music. There's 100 million tracks roughly on Spotify now, which is up significantly from 10 years ago. We've seen growth in TV and film, but not anywhere near at that level. We may see that really accelerate in volume, but that's going to have a dramatic impact on the industry. I mean, you will have a growing pie of revenue, but you're going to be splitting that revenue up into thinner and thinner slices around the industry. And I do think for Netflix, it's an interesting question. In the short to medium term, and in our new bull case driven by AI, we think margins can get up to 50%, which underpins our 2250 Netflix bull case. But long term, I do think it's an interesting question as the creator economy really explodes and these tools enable better and better content from more and more storytellers. Does that create long-term risk to their scale advantage in production,
for those who make it? But then it takes me to YouTube, and I think, well, I would imagine that would be a continued beneficiary. Already, probably the most highly valued pure play media company if you were to break it out of Alphabet. But is it potentially a beneficiary of all these new creators that are going to be empowered by these new tools?
Absolutely. I mean, if you know this, if you look at YouTube and Netflix, they're 20% plus of TV consumption in the U.S. already and growing. As we look ahead, I mean, those are the two, I think, clear dominant leaders in global television, if we sort of define it that way. And I think YouTube comes at this from a position of real strength, given they've built the business on the back of the creator economy. Netflix, however, their business model, which really helps sort of share risk in a different way by promising or at least guaranteeing a certain level of economics to creators, does give them an advantage as well as the number of storytellers expand. So it's going to be a really interesting competitive landscape over the next 5 to 10 years.
Ben, there's some theories that Gen AI will allow content to become so customizable for the user that at some point, if you take it to the extreme, you might be the only viewer who looks at a particular piece of content or a movie that's tailored exclusively for you. Do you think that's unreasonable to think that far out?
No, I don't at all. And I think one of the things to think about is, how do we handle copyright? And how do we handle exclusive content? I mean, it's a real question as to whether or not the consumer is going to be able to identify what's real, or in this case, human created versus AI generated. And my guess is over time, those lines will blur. So things like copyright, content tagging will become more and more important. And just as an aside, I think this does actually increase the value of experiential assets. This is a point we make in the report. Things like theme parks, concerts, sporting events. The more we have a customized, personalized digital experience, I think the more we're all going to seek out communal experiences where we get together, particularly from an entertainment point of view. So we do like businesses in media like Live Nation, Disney's theme parks, et cetera, as sort of maybe non-obvious AI beneficiaries.
I mean, you can see, though, how the sphere, which combines entertainment and content production, And that immersive, experiential opportunity for consumers could benefit from both ways, because you can explode the content production for less of the cost and still provide that opportunity that humans are demanding. By the way, Carl, if they tailor the content for individuals, doesn't it kind of cut down on our ability to talk about, hey, did you see that movie? And it was a totally different experience for you than me.
I think that's what Ben is saying, is that you might have something hyper-specific on an individual level, Ben, right? But you still want to have some water cooler
some
effect,
shared
right?
experience, yeah.
Absolutely. We're communal beings, I think, in our DNA. And I think the pandemic actually supercharged the value we place on live experiences. And so this whole trend, I think, is just going to accelerate as our digital lives grow in customization. We're all going to seek out those live communal experiences. I think those are businesses that'll benefit for sure.
Yeah. Well, Ben, as you say in the report, it's your first deep dive. I'm sure there will be more to come as we learn and start to see how behaviors change. Appreciate it. Ben Swinburne from Morgan Stanley.
Thank you.